Are prices finally starting to drop here in the county of San Bernardino? Stay tuned. Hey, welcome to my channel. My name is Christian Medina, your Inland Empire Realtor. And in today's video, we're going to be going through a market update for the county of San Bernardino. Now, I'll apologize, I'm a bit late to this video. It should have gone out the first week of August. But regardless of the time, you'll still be able to see the stats as they occurred the month prior. Before we get started, if you're returning to my channel, welcome back. If you're new to this channel, as I mentioned earlier, my name is Christian Medina. I'm a realtor here in the Inland Empire. The purpose of my channel is to give you as much value, as much information through video, whether you're looking to buy, sell, or invest. And the goal is to help you make those critical decisions before you make the move. If this sounds like your cup of tea, please don't forget to hit the like button, hit subscribe, and don't forget to hit that bell, and it'll alert you every time I put up a new video. Alright guys, so let's get into it. We're going to be looking at a market update, and this is going to be referring to the month of July. We can't look at August yet because the month is not over, but when we hit the first week of September, I'll make sure to show you what's happened in August. And what you're going to be able to see on the market update is what's happening up until this point, and also how you compare now to a year ago, 2 years ago, and you kind of see where the market's going. Today we're going to be looking at San Bernardino County. It's the county that I live in. If you guys want more information about Orange County, LA County, any other county, please put it on the comments below, or you can contact me directly to my email. So in today's video, we're going to be touching on new listings, inventory, pending sales, and where home prices are heading. So let's go ahead and take a look, and we're going to be using Redfin data center to look at some of these metrics. New listings in San Bernardino County, okay? So I just want to make that distinction, not city, but the whole county of San Bernardino, which is huge. So for new listings, according to the data here from July 10th to August 6th, we're looking at the first week of August, we are down year over year, negative 22.4% as far as new listings go. And as you can see here, compared to 2021, we're down somewhere around 34%. So a question I keep getting is, why is it that there is such low inventory? My response is because, in my opinion, it's because there's a lot of homeowners right now that have locked in into lower interest rates, and they're not moving. So in fact, let me show you this graph right here. These are people that are locked in mortgage rates that are less than 4%. So 70.7% of this is nationwide, of Americans right now have an interest rate that's below 4%. So according to this graph, and the source here is FHFA, 26% of homeowners right now are locked in on interest rates less than 3%. 44.7% of Americans right now have rates between 3 and 4%, and you can see here from 4 to 5, 5 to 6, and 6%. So the majority of these people here probably will not be moving. And if they really wanted to move, they'll probably just decide to rent out the place and move on to the next home and use this property as a source of income. All right, so next metric we're going to be looking at is going to be, these are going to be the active listings. Now, if we're looking at active listings, as you can see here from year over year, we're down 31.86% on active listings. These are listings right now actively on the market and not too far off from 2021. So what this is doing right now is that we have such low inventory right now, but we still have a lot of buyers out there that are looking to buy. And as you guys probably already know, low supply and high demand equals what? More than likely it's going to be a higher price. But we'll touch on that later on in this video. But going back to the graph, we see here that again we're negative 30.94 as opposed to last year. Why was it that we had so much inventory last year around this time? One thing is that we're past the summer, getting into spring, and what happened last June is that the interest rates increased drastically. So that left more homes sitting on the market for a longer period of time. And you can see here at the beginning of the year, we started off with 5,538 active listings, and we kind of fell through. In February is kind of when I saw the market kind of shifting again and buyers started to buy. But it went kind of flat here for a little bit, and it's slowly starting to trickle up a little. But we're still well short of the 5,500 that we had earlier in the year. All right, so the next thing we're going to be looking at is the pending sales, which are here. And again, we're on 2023. Right now, year over year, we're down 13.5% as compared to 2022, and even much less as compared to 2021 in pending sales. What are pending sales? It's when a homeowner has accepted a buyer's offer and it's been taken out of the market. Now, it has not closed yet, which is why it's called pending. It's pending closing. So we're not too far off from 2022. We're kind of way off from 2021. 2022, we'll be able to see what happens with these, in case they fall out of escrow and had to go back active on the market, but we'll be able to see what they closed at within 30 to 45 days. So pending sales, as you can see here from May of this year, it's kind of remained a little flat. It's gone up just a little here at the end of July, beginning of August. And we'll see if it does the same thing as it did last year, because last year it kind of peaked over here and came down a little and then kind of remained flat before it went down. We'll see if that trend continues. All right, so the next metric we're going to be looking at is days on market. So how long is it taking the home from the day it goes active to when they accept an offer, when it's taken off the market? All right, so the median days on market right now is about 33 days in the county of San Bernardino. And we're almost on par of what was happening just a year before, but I have a feeling that we're going to be going below what was happening last year. Remember, last year, June, interest rates went up, so homes were staying on the market a lot longer, as you can see here. So I feel that for the month of August, we're going to see this probably below what was happening last year. All right, so the next metric we're going to be looking at is the average sale to list ratio. So what this is telling us is, if we list the house at $600,000 and we sold it at $600,000, that puts us at 100% from the list price. If it sells below, it'll be below 100%. If it sells above, it'll be above the 100%. So as of August 7th here, we're pretty much on par from last year as far as the percentage of list price. Now, we started the year off really low because, again, we had the interest rate shock to a lot of the buyers. So a lot of the homeowners had decided to start dropping the prices. And as you can see here at the end of 2022, again, we'll look at, June, everything's starting to go down. People started to reduce their price and it started to come all the way down. And we started the year lower. And again, in February, I started seeing a big change. A lot of the buyers were past the whole interest rate shock and started purchasing again. And you started to see prices going up and homes starting to sell at the list price or above. You kind of see it here. So I'm going to take a guess here that for the month of August, we're probably going to be past this threshold here at over 100%. Next metric we're going to be looking at is price drops. We started the year at, just at above 3%. Positive 1.5% year over year. They kind of went up here in January because, again, people were scrambling around and starting to reduce their price. And then you kind of see it drop here a little, remain kind of flat here throughout April and May. And then you're starting to see the price drops, again, starting to come up slightly. So it may be that they go on par of what happened last year. That remains to be seen, and we'll see again next month to see where that trends. And then finally, we're going to be taking a look at the medium sales price. So we started off the video asking if prices were starting to drop here in the county of San Bernardino. And the answer to that question is no, they're actually going up. Right now, year over year, we're actually above 3% versus 2022. So as you can see here, the prices started pretty much on par as 2022. There was a little bit of a shift here, and then prices came down for a bit. But then again, in February, buyers, I think, started getting over the whole interest rate shock, started buying, and it became more of a competitive market. It peaked here at around April, came down here slightly at the end of April, and again, started picking up in the month of May. Remained flat here up until June, and from June all the way till now, it's been trending upwards. So our price is finally coming down, not based on this chart and not based on what I'm seeing right now in the market. The market is very competitive right now. Do I think there's going to be a market crash at any point? I don't see it. Is it possible that this market's going to crash? Well, anything's possible, but from what we see here on this graph, homeowners not moving, having low interest rates, low supply, and high demand, it's just causing the prices to keep going up. What we're looking forward to is the first quarter of next year and see if the interest rates drop, at a 5.5%, maybe a 5% is what we're kind of hoping. Maybe it'll make some of these homeowners motivated or closer to that 5% to actually sell their homes and start looking for something else. Hopefully opening up more inventory for all the buyers that there are right now. Alright guys, that's it for today's video. Hopefully this information helps you on your decision making. I'd like to see what you guys think. Go ahead and comment below. Once again, thanks for joining me, and I'll see you guys on the next video.